The key question to ask here is, are we in a mid-cycle correction or are we in a structurally bear market? And to me, the answer is firmly that we are in a mid-cycle correction. And I'll just tell you why I think like that. So generally the bear markets happen when either there is a big macro issue or there is a corporate leverage problem which leads to the credit cycle for the banking system, or there is a big household leverage issue. Now you think about India, fiscal deficit, current account deficit, inflation, all the three macro parameters very much trending in the right line, right? All under control, all trending towards the right direction. Think about the corporate leverage, one of the lowest in the last 10 years. The asset quality of the banking sector on the corporate side, one of the best in the 10 years. Household leverage, yes, there are some very incipient signs on the unsecured loans and credit cards and microfinance, but by and large, those are very small portion of the banking system. So mortgages, car loans, any secured loan product you talk about, the asset quality is still fairly good. So there is no asset quality issue, there is no credit cycle issue, there is no macro stability issue. So what is that is leading to the correction in the market? Yes, there is a soft economic patch. Corporate earnings long-term grow in line with the nominal GDP at about 10-11%. Yeah. But we were in that phase of very strong earnings growth of more than 20% of the last 4 years. So market is realizing that we are in that stage of the economic cycle where the earnings growth is likely to be more in line with the nominal GDP, not so much excess compared to the nominal GDP, and that's what has led to, I would say, some corrections, which is healthy and which is providing an opportunity for people who are there on the sidelines, I would say, waiting for the correction.
Okay, this consumption budget, how much boost to the consumption economy would it give?
So numbers are out there. So $12 billion or roughly about 30 basis points of GDP is the tax foregone by the union budget for the consumption. And effectively, you can think of it as a 30 basis point stimulus for the consumption. Obviously, the markets have reacted very positively on the discretionary consumption names because, and rightly so, we believe that some of the more discretionary items will get a pickup, and that's where the slowdown was also much more visible in the last couple of quarters. So we think the consumption parameters are likely to start trending upwards from here on, especially the discretionary consumption, urban consumption, where there was bulk of the slowdown which was being seen. There should be signs of recovery because of this consumption stimulus coming from the budget.